Hello traders and welcome to a new video. I'm using a new microphone. I already know that this is going to sound like 20 times more professional and clearer because this microphone is sick. But all right, let's move into the topic for today's video. I've talked about scalping and short-term trading a lot, but what I wanted to do is to compile the 3 strategies that I've found to have the highest probability of success that I've used day in, day out. So this past month, I've been basically scalping nonstop, a bunch of different coins. It's gone pretty well. Here are 3 patterns I think you should look out for. If you're a beginning trader, do not watch this video. You're going to be confused. Except for scenario 3, you're going to be very, very confused. But if you're an intermediate trader or an advanced trader, then this is definitely for you. Scenario 1, attacking a large order wall on low volatility. First of all, let's look at what does that look like. Look at the first arrow on ApeCoin perpetual futures on the 15-second time frame. What we can see here is that at the price about 13.49, there's a bid wall and a support level. And it looks like price wasn't really, able to cross that point until 1731, 1732, when a large sell-off occurred. What's going on here? Well, when a large bid wall pops up, and it's constantly hit or attacked, basically, typically the wall falls and price falls right through with it. And a good strategy that I like to do is, especially when price approaches a bid wall like this, such as price is going down, 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 and then it hits a bid wall like this, keeps hitting it, it typically caves in and eventually breaks down. And the best way to trade this can be a bit tough, but basically you want to time it so that your liquidity breaks the wall. What that means is, let's say that there's 100,000 ape in a bid wall. It's getting hit like that. And now there's 4,000 ape. If a bid wall goes from 100K to 4K, that's a sign of significant selling pressure and very, very, very likely the price is going to tank after it breaks that wall. So what I would do in that situation is probably sell off maybe 2,000 or 3,000 ape to basically break the wall. But the way I would do it is I do not use a market order ever. I would use a limit sell order at the price of the bid wall. That way, if you're actually not able to sell on the wall because someone else sold liquidity before you did, then your order isn't going to just like market sell to market bottom. Again, the longer that a wall remains unbroken and the larger that the wall is, typically the stronger the move will be beyond the wall. And typically I just take profit after the momentum fades or there's a volume spike. So this is a trade I actually took. It was probably one of the most perfect short-term trades I could have took. Yes, it was only about 0.5% profit, but on high leverage, that can be a lot. But more importantly, it was just very clean. What I did was I shorted the 13.49 on the break of the bid wall. Then what you'll see is that an offer wall popped up, a large limit sell order popped up at about 13.41, 13.42, around there. I then just exited my short at 13.42. So I was able to scalp that and make a fair amount of money in a few minutes on very, very, on really not a lot of risk. Because typically when a large amount of pressure mounts up against something, typically it bursts right through. So that's basically what this strategy is. I was able to take profit at 13.42. That one's decently simple. This one's going to be a little bit more complex. This is attacking a large order wall and high volatility. Of the 3 scenarios today, this is the one that you probably should pay the most attention to, because this is the one that will lead to the highest profits and or the highest losses, because it's incredibly high risk, high reward. So this is when price makes a highly volatile move on strong volume and high volatility, and then a massive wall forms. A massive wall forms such that it is supporting the move and not against it. What do I mean by that? Well, imagine that price falls a lot, and there's an offer wall, meaning a large amount of a large limit sell order. Let's call it 10K ape. It keeps getting lowered and lowered and lowered and lowered and lowered and lowered. And it keeps getting lowered, and what's eventually going to happen is eventually that sell order, if it keeps doing that, there will come a point in time where it breaks and gets bought out. A lot of times these kinds of scenarios occur when a large whale is using an algorithm to basically press the price as low as possible. What they do is one guy or a bunch of bots or a bunch of guys can put a large limit sell order, and then they just market sell, pressure other people to market sell, keep lowering that limit sell order, and then eventually, as the limit sell order keeps lowering, like that. Eventually, that limit sell order does break almost always, and when it does break, typically a very strong reversal forms. So this is a kind of strategy that I love because it's not too hard to make a fair amount of money very quickly. Here's what it looks like in real life. So right here we can see that price rises at the time of 2230. Yeah, you guys can see that. At the time of 2230, price rises up to about 24.75 on the coin HNT perp, helium. What ends up happening though is that a large bid wall forms, and what you can basically see, if you are an advanced trader, you probably already noticed this, but I'll point it out. If you look at the time of 2241, the time of 2247, 48, you can see that there's a bid wall that keeps rising. Now you might say, wait, Bennett, I don't see any order depth or bid walls. You can basically tell where a bid or offer wall are if price keeps hitting a certain point and isn't able to breach it. That's typically the sign of a large order wall, almost always. Now what we can see is at the time of 2242 that there was that large bid wall, and then it got put a little bit higher at the time of 2246, 47. It got put higher at the time of 2248. This bid wall kept getting raised and raised and raised, just like I was mentioning. Basically, a large buyer was just putting their buy wall higher and higher and higher. Guess what eventually happens? Eventually, you're going to get to a point, if a whale keeps doing this, eventually there will come a point where that wall fails. Or they just give up and remove the wall entirely. But this is, again, probably the easiest / best trade one could have made throughout this entire presentation. Because price rises on high volatility, lots of buying, yeah, I can see that. It looks pretty strong. But then that large bid wall just staying flat and that all of that selling pressure hitting it, it's just such a good time to play the reversal. And you can see here that if you had shorted at 24.49 at the bid wall, you never would have been losing money. Because right after the price actually burst through that wall, basically price never came back for a very long time, and you could have gotten a pretty easy 1 or 2% scalp magnified by leverage. So this is another pretty easy way to scalp, and probably the thing I look out for the most, that high volatility move created by a moving bid wall or a moving offer wall. So this is what it looks like when there's a large buyer who keeps putting that buy wall higher. This is kind of my poorly drawn 6-year-old schematic of when a large seller places a limit sell order lower and lower, and eventually it breaks. If you aren't comfortable identifying these, I'd recommend you go check out my order flow course where I really detail what this looks like and how to find it. I would say if you're intermediate or just like a little bit more than a beginner, then definitely use order flow. If you would call yourself incredibly advanced, then you probably will have the ability to identify this kind of strategy just through price and volume. If you have a good eye for pattern recognition and you've been in the markets for a long time, you're probably going to be able to see where these order walls form through the patterns of volume and price repetition. All right, final strategy, which is probably the most common. This one suits really, this kind of scalping strategy can fit anyone. I'm actually going to get rid of my thing here to show you. So this is scenario 3, which is, again, the third best scalping strategy that I really use on a 1-minute time frame. Basically, imagine one of two different scenarios. One, price rises on strong buying volume and then falls on weak selling volume. Basically, what I like to do is to place my limit buys during that weak sell-off by placing bids just below the current price. And then I like to take profit after price spikes up on a buy volume spike, or if this does happen, you might have to just take the loss or a slight profit if you notice some strong selling coming in. Now, it's just the reverse for shorting, where price falls in very strong volume, rises in weak volume, and I think you get it. But let's go look at some examples. This is Ape Coin Perpetual Futures again. Now, what we see here, before I reveal it, there are two phases of this market that I'm currently looking at. One that had very strong selling and one that had some actually pretty decent buying. What do you see here before I reveal it? On the left side of the chart before 1310, there's pretty strong selling. You know, the sellers are pretty much dominating over the buyers if you look at volume on the bottom portion. And if you look at how many times the red volume went above the volume moving average, there's a fair amount of selling. But the point that I want to focus on is the pretty strong buying that occurs after 1310. If you look here, especially at the candle of 1314, if you see that it's the red candle that happened right before the bullish candle with a wick. If you look at the candle at 1314, it's a sell-off, but the sell-off had virtually no volume. If you look at the buying volume around it, the buying volume was like 4 or 5 times higher. There was little to no selling volume at all. That's a very bullish sign. Likewise, also if you look at 1321 on the chart below, you will notice that it's another selling move. Clearly price went down, but there's virtually no selling volume. In these kinds of scenarios, price typically rises. And what I like to do is if I notice this, I'm going to place bids around that area or just a little bit below. And typically I'm able to get near the market bottom when I do this, the local market bottom. The final thing I do want to mention is probably the greatest candles at 1335. If you look at the timestamp of 1335 here, the sell-off is actually decently strong, but there is zero volume. Barely anyone is selling. When you see something like this, typically price doesn't like to go in that direction. And there's a really important note on why. When you see very weak buying or very weak selling, basically what that means is that traders aren't really interested in that price area that was just approached. So the natural thing to happen is, well, price likes to go to areas of interest. Price likes to go to areas of heavy trading and heavy volume. That's what price gravitates toward. So if price is really struggling to sell off, that means that at lower prices, traders are just not that interested in buying or selling. That means that it's incredibly likely that price will go to a point of high interest, i.e. a reversal, rising. But then if you see something like weak selling, no one's really interested in lower prices, and then the price kind of goes up, but weak buying, that can be a sign of consolidation. So that's something that you do need to look out for, is where is price most interested in going? And in this example right here, lots of strong buying. Really, the sellers had nothing. They barely sold. Price rises. I used an arrow just to show, the previous point where we left off. Yeah, there's really just not that much selling after 1315. That's probably because a lot of the sellers got flushed out. All right, let's do the reverse. So this is an example. I think it kind of speaks for itself just by looking at volume, who's in control. The buyers here look like they have incredibly little power. The sellers are clearly dominating the game. There's strong bearish candlesticks with very strong selling. All of the bullish candlesticks just really don't have a lot of volume. This is one of the most bearish pictures I've ever seen, and one that as a scalper, as a very short-term trader, I would be in love. I would love to short this at, really any tick higher. Here's the outcome. Yeah, so price just tanks, especially at that arrow. If you were able to just short a little bit higher, maybe at 13.36, 13.35 on the far right of this chart, it would have led to a beautiful scalp, and one that probably wouldn't have been too hard to find. The scenario 1 and scenario 2 do involve advanced trading techniques. This is not advanced. This scenario is basically just identifying who's in control, where is price interested in going, and then trying to use limit orders to get there. One little quick note that's kind of cool is I want you to look at 1725, 1726. There's actually a little bit of a bid wall that forms. If you look at the price of about 13.48, at the timestamp about 1725, it looks like price was kind of like struggling to move past 13.48 because there's a large buy order. Then eventually price clears that buy order and falls lower. That could have been another great entry for selling if you notice mounting selling pressure against a buy wall. That's going to be it for this video. Remember that the 3 scenarios are, let's go to the first one, okay? Low volatility patterns where price is basically just battering away at an order wall. Of the 3 strategies, this is probably, I'd say, my least favorite. One of my favorites, but my least favorite of the best. the third best one, I'd say. It can work pretty well, though. In this kind of example, when price puts up a lot of pressure against a large limit order, this is by far the best one, I would say. It leads to the highest profits. It's just that this can be incredibly risky if you don't know what you're doing and if you have bad risk management. But this is something that if you can identify, one or two large buyers that are just propping price up higher and making a bad move, such as leaving a static bid wall, then you could take advantage of them pretty easily. And then my second favorite, scenario 3, the weak volume strategy. Basically, you're just looking for where is price interested, where is price disinterested, and then you just take a trade in the interested direction because it's more than probable that price will continue going there. Yep, so that's going to be it for this video. I've been trading Ape Perp probably about like the past week or two. It's been going pretty well, and I would recommend checking this out because this is a coin that has been pretty good with volume. As you can see, like this is live, and there's pretty strong volume here and pretty strong volume here. You can see the price is having a pretty clean direction going down. And I think that, if we were live, I would probably want to short like somewhere around here. Will be beautiful, especially after that strong selling right there. And what's really interesting is whenever something like this happens after high volatility, you always need to check the volume of the candle that goes up. If this is really weak volume, price is going to fall. If this is pretty strong buying volume, then price will probably just trickle up a little bit higher. But right now, it's kind of hard to tell because this candle hasn't closed. It's only, it's another 30 seconds till it closes. But right now it looks, I can't really say it's too early because I want to see just a few more candles and see if there's strong buying or not. Because if there isn't strong buying, we're probably going to go lower. But yeah, that's going to do it for this video. Those are the 3 scalping techniques that I personally really like to use. And if you have any questions on them, you can check out my courses or you could message me in my Discord. Happy trading.